So I was literally streaming and then I got cut off because my hotel Wi-Fi is garbage. Anyway, welcome back to Strongman Personal Finance. We're going to cover the most recent earnings of 3M again, even though I already talked about it for the last 15 freaking minutes. So 3M stock is up 23% after fantastic, amazing earnings, and we're going to cover them. 3M is this company that makes 60,000 different products, Scotch tape, this, that. They make so much stuff you can't even wrap your brain around it. The big deal with this company is it's been getting sued for a bunch of different big things, like the veterans earplug lawsuit, because heroes like me, we had earplugs made by 3M that apparently didn't work overseas, and now we all have hearing damage, apparently, supposedly. But it's mostly a grift. I can guarantee you, because veterans are big grifters. That's true. And then they had the PFAS lawsuit, which is a lawsuit about forever chemicals that were dumped in water and hurt people, blah, 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 blah. So this company's been getting sued a lot. So they finally had a bright spot where the stock rallied 22%. But remember, the stock is still down 26%, reflecting very hard times that are just now being let off. Now, the funny thing about this company that you notice right off the bat is if you look at their revenue, it's basically been flat, and then it's dropped over the last couple of quarters. This is because they're spinning off some parts of their business. But the revenue's been flat for the last 5 years. So if you think about that, we've had, 30% cumulative inflation, but the revenue is flat or actually down over the last 5 years. That's not good, okay? This is a very stagnant business. This is not like Palantir or Meta Magetta or something. This is a very stagnant, not dying, but lawsuit-laden, zero growth, actually massive negative growth when you factor in inflation business. And it doesn't surprise me. They make a bunch of staples and protective equipment, and it's boring. So this is 3M. So let's go ahead and check out the earnings, which I already wrote off. I'm going to do this again. Sales of $6.3 billion, down 0.5% year over year. Flat revenue once again. Adjusted sales of $6 billion with organic growth up 1.2%. The reason they're saying that is because they spun off their healthcare business. They called it Solventum or something, but they sold off a big part of their business because they're trying to become less of a conglomerate and focus their operations. So what they're doing is they're comparing the new part of their business, the part of the business they kept, compared to the prior year. GAAP earnings per share from continuing operations, this is the business that they kept, of 2.17, up 117% year over year, and adjusted EPS from continuing operations up 39%. It's important to look at adjusted EPS for 3M because they've had so many lawsuits that it negatively affects their earnings. They get a hit on their income statement for a one-time charge because of all these lawsuits they're getting. So if you want to compare it, you got to look at it from an adjusted standpoint, which we'll look at in a second. Operating cash flow of $1 billion and adjusted free cash flow of $1.2 billion. Okay. And they raised guidance for earnings per share from 6.8 EPS to 7 from the bottom. That's why the stock went up, right? Wow, that's crazy guidance. So they have a reconciliation of GAAP earnings per share from continuing operations to adjusted EPS from continuing operations. You always want to know how they adjust earnings per share. If you ever see adjusted earnings per share, always find the reconciliation. It shows you how you go from one number to the other. The reason you want to do that is because they could be doing random crap to adjust this stuff. And you want to make sure they're not adding or subtracting stupid crap. You want to make sure it's actually reasonable. So the big one, the reason the GAAP EPS was so bad for the last quarter of last year was because they had a write-off to accrue or record a lawsuit that was basically won against them. They admitted fault. And when a company admits fault, they now owe money, right? Well, the money they owe is an expense. But that expense is not spread out over the payments. That expense is recorded in the quarter that they finally admit defeat, that they finally admit liability. Keep that in mind. That's why you see these huge hits on their earnings per share. The net cost for significant litigation was $14.43 billion. They recorded that expense in one quarter last year compared to $440 million this quarter. They have a reconciliation item of $2 billion for an increase in the value of Solventum ownership. That's the healthcare part of their business they spun off. They have a pension risk transfer charge. Not sure what that is. Probably something to do with the spinoff. And then other special items. But you can see the adjusted EPS for continuing operations, even excluding those one-time special items, is up. So that's that. But overall, look at the sales. Okay, total sales are flat. Organic sales overall are down. Acquisitions, divestitures are down, and then there's some translation adjustments. Now, they have some adjusted sales right here. I'm assuming this is prior to the spinoff, but still their sales growth is tepid. It's basically negative after inflation. And over time, or flat sales growth when you have pretty significant inflation is huge. Huge, huge, huge. Like my schlong, okay? 3M returned $786 million to shareholders via dividends and share repurchases. Oh, wow. I'm sure you're going to keep getting crazy dividends going into the future for a company that can't even grow its revenues faster than inflation. I mean, there's only so many expenses you can cut. Just saying, okay? And this company's shelling out billions of dollars in liability payments. So, of course, everybody's going crazy because the adjusted earnings per share forecast, the bottom went from 6.8 to 7. The top is still 7.3 to 7.3, but they had a slight increase in adjusted earnings per share expectations, and apparently that's just amazing for the company. So you can get slightly more dividend, but the adjusted total sales growth is still basically flat. It's negative after inflation. Wow. So in the prior video, I was looking at the balance sheet. We already covered the income statement. We'll go over it briefly. Net sales are flat year over year. Cost of sales, that's the cost of the items they're selling. It was inventory on the balance sheet. It gets expensed to cost of sales when it's sold. That went down a little bit. Selling general administrative expenses. This is where the big charge was recorded. So you can see in the 3 months into June 30th, 2023, they expensed the total cost of the lawsuit they lost in that quarter. That's why you have $11.615 billion. But that's not a cash outflow because they're actually paying the cash over the next 5 or 10 years. But the expense, the accrual, when you record an expense, when it's incurred, not when the cash is paid, that was recorded in the second quarter of last year. That's why you see the huge difference, $11.6 billion versus $1.1 billion. And then they had a slight reduction in research and development expenses. So overall, they have positive earnings per share versus negative because of the difference in the charge. But they still had some good profit growth because they cut cost of sales and R&D, but I mean, that's still not impressive. I'm just putting that out there, okay? The balance sheet. What do they have on their balance sheet? So they have $10 billion of cash, $255 million of marketable securities, and $3.57 billion of accounts receivable for about $13.8 billion of very liquid cash versus current debts of $14.3 billion. Now, their total current assets, this is cash, marketable securities, receivables, inventory, prepaids, etc., $19.5 billion versus the $14 billion. So overall, their current ratio, which measures liquidity, can they pay their current debts, is fine overall. They're probably going to be able to pay their debts. Now, the funny thing is, you see this other current liabilities here? If they didn't have their lawsuits, which are bolstering this number, they would be doing a lot better. Look at what the lawsuits did. So this was the other current liabilities, debts due within a year for the prior quarter, $6.6 billion. Now it's $9.05 billion. That's from the lawsuits. You see what happens? The lawsuits hit their balance sheet, and then it hits their income statement when they lose, and then it hits their balance sheet and their cash flow over time. Yeah, you're going to get your dividends, bro. Yeah, your share buybacks are going to be crazy. This company is just like a legal liability. So property, plant, and equipment, they got $23 billion. They paid $23 billion historically for their property, plant, and equipment, and they've recorded $15.8 billion of accumulated depreciation. So they have used 278. They have used up, did I do that math right? 15,806, 23,270. Yeah, they have used up 68% of their property, plant, and equipment. So a lot of their buildings, factories, whatever, are a little bit older, but they're not about to be replaced right now. They're still going to get a couple years of good use. But you want to watch that because over time you have to replace your fixed assets. And if you're replacing fixed assets, that's money that's not going to your dividend or share buybacks. So older property, plant, equipment, but nothing crazy. All right, they got long-term debt is down a little bit. Other liabilities. So basically their lawsuits, they're hitting here, the 11.1 billion of long-term debt and the 9. A big chunk of those is debt. So if you compare their total equity, they have total equity of $4 billion. All it takes is one more lawsuit to wipe out the company's equity. And all it takes is one more lawsuit and they will have more debt than assets. Just putting that out there, okay? So we got cash from operations. Cash from operating activities is down. It looks like the big difference is from other net, which doesn't give a lot of detail here. But you can see last year they added back $10.6 billion on their reconciliation between GAAP net income and operating cash flow because when they lost the lawsuit or they admitted fault, they recorded it, but that doesn't mean they paid the cash, but they recorded the expense on their income statement. So it gets added back. Non-cash expenses get added back on the income statement. That's the difference there, okay? So cash from operations is down, but I mean, there could just be a timing difference. Purchases of PP&E, that's down a little bit. Let's see. Yeah, nothing really crazy here. Repayments of debt. Look at the increase in repayments of debt. 2.6 billion versus 1.8 billion. What else is going on here? Dividends. Dividends are down. So dividends have been slashed. They increased shares of treasury by buying back treasuries a little bit, or buying back stock, share buybacks. But overall, here's the problem. So let's go down and look at the big one here. Pending or potential litigation investigations outside the United States. So they got some kind of lawsuit going on in Belgium. You can read more about it here, but it's like provisional damages of 500 euros to each of 4 family members who live near a certain site in Belgium. Blah, 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 blah. So they're getting sued in Belgium. It doesn't look like it's that big of a one. Then in the Netherlands, in May 2023, the government of the Netherlands sent 3M Belgium a notice of liability saying that it holds 3M Belgium liable for damages related to alleged PFAS contamination. That's the forever chemicals, okay? That's more potential money. And then we got a lawsuit going on in Canada. So you need to keep careful track of this because they're disclosing information that may not have hit the balance sheet yet. But when they lose the lawsuit, or they're pretty sure they're going to lose it, that's when they record the debt. So the problem with this company is the future losses of lawsuits and liabilities that could potentially massively increase the debt load of this company. And the more lawsuits they lose, the less money you get returned to you as an investor, cash and share buybacks. On top of that, even if they don't lose any lawsuits, they have massively declining revenues on an inflation-adjusted basis. This company is a freaking turd, okay? I don't care if the stock goes up. I'd rather buy VT than this thing right here. I'm just putting that out there. But that's my thoughts. Hopefully you enjoyed the video. Hopefully this recording worked, and I'll talk to you later. Oh, and don't forget, if you want a sponsored video, you can send me $50, and I will make you a sponsored video on whatever topic you want. See the pinned comment below. I will not do stock price predictions. Check out Stop Being a Broke Loser. It's on Amazon. It's my book. It's amazing. You will learn so much, and you will stop being a broke loser. Buy it. And also, if you want private tutoring sessions with me, a certified public accountant, $75 an hour. See the pinned comment below. Talk to you later. Cheers.